Traders, I want to show you something. As tempting as this seems, it could be a, how do you say, a wolf in sheep's clothing perhaps, right? So this is trending up nicely. We've got a beautiful trend giving us some really nice price action. Bit of a low here, okay. Higher high, higher low, right? Trades off with a vengeance. Okay, we've got some displacement going on with this move, and it would be really easy for a lot of newbie traders to go for a buy. Right, so we're looking at the 15-minute chart, and we can see that this has been successful all through here with this setup, right? Into the London Open, and it's pushing up. You go in, tight stop, and there's your trade, right? Makes sense because everything else in here kind of seemed to stack up, right? We look for the pullback and we buy, and everything is, as my dad used to say, hunky-dory. All right. I mean, I'm doing this video for the benefit of those of you who might be new to trading. So it's so important to go out and get a bit of a perspective from, I love the 4-hour chart, you know, the higher time frame. And into the end of the week, Thursdays and especially Fridays, we tend to see fairly aggressive stop hunts. In other words, a move like this, definitely not out of the question, right? So when you look at this chart, and I'm doing this, it's kind of to help people who are new to trading get a bit of an understanding. When you see a trend pushing up like this, obviously it's bullish on the daily, then the targets for smart money is going to always be the highs above a previous daily candle swing high. So that would be definitely, you know, a target, a potential target, and the next port of call, apart from this guy here, where we might see, well, especially around in here, where we might see some reaction. Let's pull this through here. I'll grab this bullish candle, like both of them, and we'll just mark that up as a key distribution level. Right, so we've got these nested levels. Right, this one up here, big level, this wide range, and this level here. All right, so target 1, midway through this one is a potential target 2, and then ultimately target 3. Okay, bullish trend, and smart money is looking for liquidity, so that's the obvious draw on liquidity up in around here. All right, now this is not my concept. All right, I'm sharing my version of what I've learned from my mentors and the years that I've been in the markets. You know, so you know you interpret things the way you do, and but yeah, it's important to gain an understanding that price is seeking liquidity. And the other thing that it's looking to do is rebalance, right? So if we go out of here, it's pushing up, and actually we should look left at the current price level. What have we got? Okay, we've got this, see this thin candle here on the daily time frame. So this is a huge bearish gap. It's one-way trading, right? So it's a bearish imbalance on the daily time frame. So it's reaching into, and something that you need to keep in mind with an imbalance is that the midpoint can generally be the target. So let's just grab that. So this midpoint is definitely a point of interest through the imbalance here. I won't go into explaining all that, but it just is. You're going to find that quite often, you know, you'll see price move midway through an imbalance and then trade off. So we've got this point of interest here. It's pushed up with a vengeance, right? So if we now go out or down to the 4-hour time frame, yeah, you don't want to be getting involved at a level like that. Buy, you know, like you don't want to get involved long with that, right? So yeah, my rule of thumb with a trend when it's bullish is I'm looking for an entry point on mainly on the 4-hour time frame, but I'm going to go down to a 15-minute chart to execute. So there's that. Okay, so what we've done here is we've pulled the swing low to swing high, this price swing, and I'm looking at 50% of the price swing as a point of interest in terms of where this could pull back into, and it coincides with these highs over on the left. Right? So I mean, a possible buy, I wouldn't be setting up a limit buy into the end of the week, by the way, right? And because I think this is going to pull back. I mean, it may or may not. They might push it up higher and then tank it, right? Because they're going to be looking to, smart money needs a discount, right? So if we consider this zone down under the 50 here to be discounted range, right? So most likely that this, we'll see this, especially on Friday when they hunt stops, this pulls down into this level here. And then when it does, I'm going to be looking for a potential entry. So oh, look, if you're in front, you can speculate, and that's a setup right there. If that's a 1.89, okay, go a 2R, why not? There's a 2R target. You could even, if you wanted to, stretch it out a bit further, go midway through this bearish imbalance, if you like, 2.5R, something like that. Maybe pull your stop loss up to break even. If this drops back in and the setup's there and you get a fill, and you could probably trail it, with your stop loss if you wanted to. Something like that. But that's an idea for probably Monday, if anything. I wouldn't be getting involved in the markets Friday. I mean, today we've got big data coming out involving the US dollar. It's not the best time to be trading, to be honest. Thursdays and Fridays, I really don't like trading these 2 days. It's Monday to Wednesday that are my best trading days. Anyway, that's an idea. And the other thing that you can do with this then, if you're in front of the charts, okay, look at it or watch it into the London Open on Monday or something like that, or when it pulls back down, so you know that this is your point of interest. Now have a look at this. Here's something interesting. See this thin candle here, and it actually coincides with, let me just get rid of this buy. All right, have a look at this, guys. Okay, 15-minute time frame. Imbalance, all right, bullish imbalance, so it's one-way trading, bullish there. Potential target, definitely around the 50% on the Fibonacci, this price swing, and down into this imbalance, right? Just understand that there's also an imbalance under here that could also be a target, right? So if they get aggressive on Friday, don't underestimate how far this thing can tank. And then obviously we're looking for a buy, and our target is going to be up around this level up in here. So again, a Monday opportunity possibly. So now that you've got your levels marked up, this is your point of interest, the 50% of this price swing. You could look for price. Okay, it's trending up at the moment. If you're in front of the chart and it happens to be Monday, into the London Open or perhaps into the US market, the New York Open, you want to see this thing turn around, trade back down into our optimal entry zone, and I'm going to be looking then for price to range wherever it finds its feet. Right now, where is there? Right, well, we've got an imbalance. We've got this down in here. We've got this value area. That could be it. Who knows, right? But at some stage, this is going to potentially trend down. It would most likely range sideways wherever it does that. And then we're going to be looking for the break and retest. Just keeping this simple. I don't want to complicate this. The break and retest and fail of the range high, but you want to see this trading north with a vengeance. That's generally going to be a fairly good opportunity. So you get, hypothetically speaking, let's just say this retraces, comes down, wiggles around. Don't get sucked in when it spikes up. That would be more or less a bit of a fake out to draw in buyers so that more stop losses get placed under, and then they'll hit stops. And you want to see this trade off with a vengeance, with speed, come back down into it, all right, and then potentially, we're off to wherever our target is, right? So look for this price action come Monday, however it plays out, especially the London Open and or the New York Open, guys. Pound Swissie, I mean, that could be, look, I've had a really good week this week. Paper trading, all in all, these have been... it's a paper trading account, but yeah, you can't falsify real trades like that. And these have all got stop losses and targets and whatnot. But anyway, definitely leave a comment. I'd love to hear your thoughts on this. And with that, I hope you have a great day, safe trading, and we'll see you in the next one.